Hi, if you currently have a mortgage with an advanceable line of credit component with any of the big banks, such as the STEP mortgage with Scotiabank, the Home Power Plan with CIBC, the RBC Home Line Plan, BMO's Home Owner Ready Line, or the National Bank All-in-One, then this message is for you. By now, you would have received a letter from your bank outlining upcoming changes to the advanceable mortgage products that will take effect on November the 1st. But before I get into the details of the letter and how this change impacts you, I'd like to go through a quick refresher of what an advanceable mortgage is. Essentially, an advanceable mortgage combines a mortgage with a line of credit, which acts like a home equity line of credit, referred to as a HELOC. And with the banks, a HELOC or line of credit cannot exceed 65% of the value, but between the mortgage and the line of credit, together they can get up to 80% of the home value at the time the loan was approved. This 80% is referred to as the global limit. And as you make payments towards your mortgage, the credit limit on the line would increase in an amount equal to the principal that you're paying down on the mortgage. When you make a mortgage payment, essentially, you basically have two components. It's split into two components. There is a principal pay down and there is an interest component. So let's take an example. Let's say that your mortgage payment is $1,000, and out of that $1,000, $700 goes towards paying down your principal and $300 goes towards paying down the interest. Now, the $700 is what I'm referring to here. That is the amount of principal pay down that would increase the limit on the line of credit by an equivalent amount if you have an advanceable mortgage product. So you're essentially reaccessing what you've paid down on the mortgage through the line of credit. And this is a great feature that many homeowners and investors alike enjoy. Now, 15 months ago, OSFI, the financial services regulator, introduced a new rule to basically limit how consumers or borrowers with advanceable mortgages can reborrow any paid down principal. And basically what they want is they don't want anybody to reborrow money above 65% of the value of the property at the time the loan was approved. This change is going to take effect on November the 1st for the big six banks and January the 1st for most other federally regulated lenders. OSFI expects that any and all lending above 65% of the loan to value, which cannot exceed 80%, will be both amortizing and non-advanceable. That's what the regulator says. Also, the principal payments applied to the portion above the 65% should be matched by a reduction in the overall authorized limit or the global limit until that global limit reduces to 65%. Okay, I had to read this 20 times before I understood what this really means. It was easier for me to actually understand Spanish than to understand what this is all about. So let me walk you through what it means through an example. Recently, I received my Scotia STEP letter informing me of the change. I'm not going to read it all, but will highlight the key paragraph that says the following. Beginning November 2023, your STEP global limit will gradually reduce to 65% over the next 25 years. This will take effect through monthly reductions of $157 to your STEP global limit. Now, let's get into the translation of what that really means. Consider a case where a borrower has $1 million house and a combined global limit of mortgages and line of credits as follows. Mortgage component number one is at $150,000. Mortgage component number 2 is at $250,000, and the client has a $400,000 revolving line of credit. So altogether, we're at 80%. The rule essentially says the following, and here's the key concept. The key concept is that the principal payments applied to any portion above 65% should be matched by a reduction in the overall global limit until this overall limit shrinks to 65%. In this example, mortgage number 2 of $250,000 along with the line of credit of $400,000 make up 65% of the value of the house, which is $1 million. So any dollars you pay down on mortgage component number 1, which is the portion representing more than the 65%, under the old rules, it used to advance over to the line, but under the new rules, will no longer advance over to the line, and instead that will gradually shrink your borrowing ability from recycling within that 80% box to eventually, getting to a 65% over time. So that's the idea here. They're trying to limit how much money you can recycle within that 80%, so that gradually over time that amount shrinks to 65% is what this really says. In the Scotia example that I shared with you earlier, the $157 that I read in the letter is basically that gradual monthly reduction in the global limit. It is not something that I'm going to pay out for myself. Instead, as I pay down the mortgage, instead of being able to re-access that 157 on the line of credit, it will now go towards shrinking the overall global limit from 80% to 65%. So here's the thing, this amount will differ from one client to another, it will differ from one bank to another, but ultimately the end game is the same for everybody who has this product. Borrowers will end up with re-advanceable mortgages that have a global limit that cannot exceed 65% over time. And if they're starting at 80%, over time that number will go down to 65%. And the difference is that some lenders will get you there more, like faster than some other lenders. So if you're re-advanceable mortgage, if you got an advanceable mortgage before September 15th, 2012, that's when this B20 regulation took effect, that product will be grandfathered. You don't have to worry. So none of what I'm talking about here applies to you. But everyone who set up their product past that deadline will be impacted. So if you decide to refinance today and you qualify for an 80% with a mortgage and a HELOC, yes, you're going to start at 80%, but over time, again, this will bring you to the 65%. So this rule applies for new advanceable mortgages that are being set up as we speak. If you have received this letter from your bank and you would like to explore new options to continue to access capital, reach out to my team at info@streetwisemortgages.com.